Why are experts saying XRP could become the backbone of the financial systems? The global financial system is standing at the edge of a major transformation. What once started as experimental blockchain technology is now moving toward becoming core financial infrastructure. Payments, settlements, securities, and liquidity management are slowly shifting into a new digital format powered by tokenization. Recently, a statement from SEC Chairman Paul Atkins reignited discussions around which digital assets are best positioned to support this transition. According to crypto pundits and analysts, XRP stands out as a leading candidate to serve as the backbone of a tokenized financial system. This idea gained traction after a Fox Business interview suggested that tokenization is not a distant future, but something that could arrive within just a few years. So in this video, we are going to break down why this statement matters, how tokenization changes finance, why XRP has a unique compliance advantage, and what this means for the broader crypto market. So, what did the SEC chairman actually say about tokenization? During a Fox Business interview, SEC Chair Paul Atkins made a crucial observation that caught the attention of both Wall Street and the crypto industry. When asked whether major banks and brokerage firms are moving toward tokenized platforms, Atkins confirmed that this shift is inevitable. More importantly, he stated that this transformation could happen within a few years, not decades. That single clarification drastically changes the timeline for institutional adoption. If regulators already expect tokenization to arrive soon, it means financial institutions must begin preparing now, not later. From a market perspective, this signals a shift from speculation to infrastructure planning. Assets that are already compliant, scalable, and institution-ready suddenly gain an advantage. This is where XRP enters the conversation as a potential backbone rather than just another crypto asset. So, why is tokenization considered the future of financial systems? Tokenization allows real-world financial instruments such as payments, stocks, bonds, and liquidity pools to be represented digitally on blockchain. This approach dramatically improves speed, cost efficiency, and transparency. Traditional financial systems rely on multiple intermediaries, delayed settlements, and fragmented ledgers. Tokenized systems, on the other hand, enable near-instant settlement, lower transaction cost, and real-time reconciliation. The market impact of this shift is massive. Institutions that adopt tokenization can unlock capital faster, reduce operational risk, and operate in 24/7 global markets. As more financial activity becomes tokenized, the need for a reliable settlement and liquidity layer becomes critical. This is precisely the role XRP is designed to fill. So, why do analysts believe XRP fits a tokenized financial world? XRP's technology aligns closely with the operational requirements of tokenized finance. The XRP ledger is known for its high-speed transactions, low fees, and ability to process large transaction volumes efficiently. In a tokenized environment, institutions cannot rely on slow or expensive networks. They need a system capable of handling enterprise-scale liquidity flows without congestion. XRP was built specifically for this purpose. From a market standpoint, this positions XRP as more than a speculative asset. Instead, it becomes a utility-driven digital asset. If tokenization adoption accelerates, as regulators suggest, demand for reliable settlement assets could increase, strengthening XRP's long-term value proposition. So, how does regulatory compliance give XRP a strategic advantage? Regulatory clarity remains one of the biggest barriers to institutional crypto adoption. Financial institutions cannot risk integrating assets, that operate in legal gray areas. This is where Ripple's compliance strategy stands out. Ripple has secured electronic money institutions licenses in key financial hubs such as the United Kingdom and Luxembourg, alongside other regulatory approvals worldwide. These licenses provide institutions with confidence that XRP operates within recognized legal frameworks. The market impact here is significant. Assets with strong compliance foundations are far more likely to be integrated into banking systems, payment rails, and tokenized settlement platforms. This reduces onboarding friction and accelerates adoption compared to less regulated alternatives. So, does institutional adoption mean for XRP's market growth? XRP's adoption story goes beyond retail trading and price speculation. Its growing use case as a settlement and liquidity tool positions it directly within institutional finance. If banks and financial institutions act on the adoption trends described by SEC Chair Atkins, XRP could become a core infrastructure asset. This would mean XRP serving as a bridge between traditional finance and blockchain-based systems, especially in a cross-border payments and tokenized liquidity. So from a market perspective, this shifts XRP's narrative from volatility-driven trading to long-term utility-driven demand. Assets that form the backbone of financial systems often experience more stable and sustained growth over time. So, what does the future hold as tokenization accelerates? As tokenization gains momentum, the financial system will increasingly rely on digital infrastructure that can scale globally. XRP appears well positioned to serve as a bridge asset, connecting legacy financial systems with blockchain-based networks. SEC Chair Paul Atkins comments reinforce the idea that this transition is no longer theoretical. It is approaching reality. In such an environment, assets with speed, compliance, and institutional trust will dominate. And finally, my own personal opinion about this is that XRP's strength lies not in hype, but in positioning. While many digital assets focus on decentralization narratives, XRP focuses on solving real financial problems at an institutional level. The SEC Chair's acknowledgement of near-term tokenization adoption adds weight to XRP's long-term thesis. If regulators already anticipate the shift, institutions will naturally gravitate toward assets that are ready today, not someday. That does not mean XRP is guaranteed success. Competition will remain fierce, and regulatory landscape can still evolve. However, among existing digital assets, XRP stands out as one of the most prepared to serve as foundational infrastructure in a tokenized financial world. So, if tokenization becomes the next phase of global finance, XRP may not just participate in that future, it may help power it. And this finally ends our video. Thank you very much for watching and see you on the next one.